When you're self-employed, we hear that sometimes it's difficult to produce the documentation to obtain a mortgage. Well, maybe things are changing. Good morning. My name is Mike Renick. I am the team lead, the senior broker with Team Renick Real Estate Services, part of that great Keller Williams on the Water family, serving Sarasota, Bradenton, all the islands, basically the entire west coast of Florida. I have as my guest, this is the Mortgage Insider. This is the December 11th edition, is Christopher Kiblin. Christopher will talk about a program called the Bank Statement Mortgage Program. But let me tell you a little bit about Chris and why he's here and part of this program. He has over 20 years experience in the finance and the mortgage industry. He has fine-tuned his customer service skills to the highest level. It's a requirement for doing business with us. He offers Manatee and Sarasota County homebuyers unbelievable service. He has a promise to you, is to give you a low rate on the right mortgage product, along with transparent and fair fees. They leverage cutting-edge technology to streamline the process and simplify every step and provide unmatched service and expert advice to help you find that perfect mortgage. Now, with my limited IT skills, if I hit the right button, Chris may actually be joining us here. Good morning, Chris. How are you doing?
Good morning, Mike. How are you?
Excellent. The year's going down fast, isn't it?
Yes, only a couple more weeks left.
We've got a lot of work to do to end the year. This program, I love all of our Tuesday mornings where we look inside of the different products. But being self-employed, being a real estate broker, this has a lot of interest to me. So I'm excited to hear what you've got to share. So go ahead and take it away.
Right. So, one of the things that I thought this was really good about, especially with you being a real estate agent, is, there's so many self-employed borrowers out there. And what we run into a lot of times is that, we understand you're self-employed, right? And so you have your deductions, but by the time you're done, making all your deductions, you don't really show the income that you need to qualify for a conventional mortgage, right? Because you're paying off your, whatever your expenses are for your business, your car payment, whatever else that you're paying for. So by the time you take all those deductions off, it's like, well, I don't have enough money to show that I qualify, even though I can qualify.
Mm-hmm.
So one of the things that we used to hear about was called no doc loans, right? We used to have these back in like 2008. Well, it's very similar to a no doc loan, but it's called a bank statement mortgage program. And what that does is that allows our self-employed borrowers who they don't show the income on their tax returns, but we can show by their deposits. And so what do I mean by that? Okay, so we can actually take your deposits in your bank account. So we do a 12-month personal bank account from your business account, and we take all those deposits and we add those all up. So then we're going to take your deposits and then we're going to divide that by 12. And that's how we come up with your income. So what it allows us to do is they say, okay, this is what you're depositing in the account. We see this money coming into the account, and this will give us that income. Now we can also do it with your business account. Let's say that your business account is where you run everything through. Then we want 24 months of your business account for your bank statements. So then we're going to take all 24 months of the business account, divide that by 24 months to come up with your income. So it's a great way for us to figure out how to produce income for you without having to go through the whole process of a conforming traditional mortgage. And the great thing is this is a portfolio loan. What we call, basically, it is a self-financed loan by a private lender who's going to do this. So the great things about this, couple points about this, we don't need any tax returns. We're not even going to look at your tax returns. So that's a good thing, right? We only require 10% down. So with this type of program, you can get down as little as 10%, and we go all the way up to $3 million on the loan amount. So that's a huge difference. So, you go buy that $1 million property just because you're not showing enough on your income taxes, you can still get that house, right? Here's the big one that I thought was kind of crazy is we actually go all the way down to 600 on credit scores, okay? And the rates are still low. So we're still in the fives. So they're not really gouging you. Traditional mortgages are right around in the high fours. So they're going to be right around the mid fives, which is not bad considering it's a private loan, right? You can go all the way up to 50% debt to income. So what that does is that allows you, let's say that you make $5,000 a month then all your debt can be up to $2,500 a month, which again, with private financing is really good. I mean, so you can do these on owner-occupied residence, second home, and investment properties. So anything that you're looking to try to purchase, we can figure out a way to make it work. There's only a 2-year seasoning for foreclosure, short sales, bankruptcies, and deed in lieu's. So if you had any of those, you only have to wait 2 years, whereas in most of your other stuff, like conventional financing, is 7 years, okay? We can actually do non-wardable condos, so we can do those. And then the time frame on these run anywhere from, you can do what we call a 5-1 ARM, and we talked about those in the previous show, and up to a 30-year fixed rate mortgage. So you can actually pick it. You can actually pick an interest only. So if you only want to do interest only for the next 10 years, you can actually pick that. The guidelines on these, because it is private money, you can actually kind of dictate what you want to do. There is no prepayment penalties for owner-occupant homes or second homes. If you have an investment property, there is. They make you keep it for at least 4 years. You can also get seller concessions from the seller. So you can ask the seller to give you up to 6% towards your closing costs and prepaids of the purchase price. So, which is still, so basically you can actually figure out a way to make that work, where it might just be that you need to bring your down payment to closing. And the only other thing is it requires 2 years of self-employment. So you just got to be in business for 2 years.
So for example, a good example of this is I just recently bought a 2019 SUV. And since it's one of the largest trucks General Motors makes, I qualify for accelerated depreciation. And what I know is that now, because I can take accelerated depreciation, will show my net income for 2018 substantially lower than the cash flow. So
Correct.
What this loan does, it looks at my cash flow, because that's a non-cash expense. It's a bookkeeping expense, right?
Exactly. Yep.
Probably not doing it justice defining it that way, because I'm not an accountant, obviously. But so it's an expense that I'm not writing checks against, and I get a huge deduction from income. So the nice thing about this is I'm no longer penalized with those kind of legal ways to bring my income down for my taxes, correct?
Correct, and that's typically the point, right? Everybody's doing it. You know, you do your taxes every year, and you're doing it illegally, right? Because you're taking out your deductions, like your car or whatever it may be. You know, if you have an office and you're deducting your rent for your office, and you're deducting this and that, you know, by the time you're done, there's income there, but maybe it's just not a lot of income. But you know very well that you have plenty of income coming in. So like you just said, the deductions can, you know, make it look like you make a lot less than what you really are making. But, you know, I mean, it's legal, right? So it's, you know, the government allows you to do those things, but then when it comes time to buy a mortgage, it makes it more difficult. And that's what this program is for.
So, you know, what we already know as independent business people is there's a net income level for taxes, but there's different ways to legally calculate that. Like, for example, if I take a client out for a dinner, only 50% of that expense is deductible for taxes. But in reality, I wrote the whole check for the thing. So you can look at it as two different kind of income levels. And what this does, it helps put the independent business person back on an even playing field to get the financing. And the rate you talked about seems very, very fair to me, and the terms seems extraordinarily fair. I mean, way above and beyond in terms of 10% down in the credit score and all that kind of stuff. So this is a huge home run, Chris. I'm really excited to learn about this.
Yeah, I mean, you know, figure the rates are in the 5s. I mean, you know, the thing is, though, I know some of these other lenders that are in other companies, I mean, they're charging 8 to 10% on these types of loans. So to keep it down in the 5s, I mean, it's really, you know, pretty impressive.
So I can do a full 30-year loan, full amortization with this program.
Yep, you can lock in for a 30-year fixed. Absolutely.
Excellent. Chris, thank you. Another great job. I'm excited about this and more things to come in the subsequent Tuesday morning. So thank you for being here. Anything else you'd like to share?
Nope. Just again, if you ever need anything, please feel free to reach out to me. My number is 443-668-5727.
Chris, thank you for everything. I'll see you next Tuesday morning.
All right. Thanks, Mike. Have a good day.
You too. Take care.